In this presentation, we will use tax software to analyze the primary income tax forms, that being the Form 1040 and the related schedule. We'll also compare the income tax formula as it relates to the tax forms. In a prior presentation, we went over the income tax formula, recalling that the income tax return, is an income tax. Therefore, the first part of the formula being, in essence, an income statement, a funny income statement, but an income statement nonetheless, getting down to what would be net income on an income statement, revenue minus expenses, revenue minus deductions, would give us the taxable income. Then the second half, applying out the rate to it, actually calculating the tax and figuring any credits and payments, that being the second half of the tax return. We want to be able then to overlay this type of formula on the tax return. So if we consider the tax return in our tax program, then here's our example tax return. We're in Form 1040. Note we have a similar relationship. First, let's just consider the components. The first page of the 1040 then is going to be, in essence, our income statement. If we get down to the calculations, we've got our income statement down here, bottom line of it being the taxable income. That's the first half. We got to get to what the taxable income then should be. The second half of the 1040, page 2 of the 1040, is then going to get into the calculation of what the tax is on the net income, the taxable income. So an income statement typically has net income. Here we have taxable income. Calculation of that taxable income, the tax on it, and then credits and payments for it, resulting, of course, in either an amount due or a refund. Now, if we go back to page 1 of the 1040, you'll note, of course, it's a lot more complicated than just our formula. There's a lot more fields in here than we see in the formula. Why is that? First, let's consider this from a formula standpoint and Excel worksheet standpoint. Here is our formula in an Excel worksheet. Now, if you're going to build this from scratch, if you're just going to make this, say, in an Excel worksheet, and you're saying, how should I build this thing? It would make sense then to have your basic formula. This is the outline of the basic formula here. And then have the detail of it, say, on another sheet, which would be similar to a tax return, another schedule. So, for example, gross income could include multiple different things that we want to then break out. On the lead sheet, we would say, hey, there's gross income. On another schedule, then, we might put all the detail of the types of gross income we have. Could have W-2 income, multiple W-2 income, interest income, dividend income, retirement plan income, a lot of different, refunds, unemployment income. Whatever is included in income then could give us the detail that would then feed into page 1, which would be the gross income. That would be a logical way to make an Excel worksheet, a logical way to make a tax return, similar fashion with the 1040 being the lead sheet, everything else being something that feeds into it. In a similar fashion, we have the above the line deductions or Schedule 1 deductions now, which are the deductions for adjusted gross income. We can have the number here, any added information then being on another sheet, which we can then have the detail of it listing all the individual components of that could be included, and then feed that into the master formula, which would be on sheet 1. That's how you would basically build the Excel worksheet. And that's how you kind of want to think about these line items. You want to say, here's the actual formula. Then there's going to be more detail within that information, the components of it. There's different types of income. There's different types of deductions that fall into this category. You can think of them basically as a different form. Itemized deductions, same thing. Here's the itemized deductions on the formula page. Then we can go to another page, which would also be itemized deductions, Schedule A, and look at all the different types of itemized deductions that could be included and feed that information then into the first page. So that's how you want to basically consider this, how it would be built. Now, if you think about the tax return, it's not built exactly that way. One, because you're going to need the information part up top. So we got to have the information part up top. And even when you're considering the calculations down below, if you think about how this thing grew organically, you're thinking about a tax return that was fairly simple. Laws get more complex, and rather than basically having a formula on the front page and then basically making schedules, they put a lot of stuff into the front page because it wasn't that much stuff before, and then it became a lot of information. So let's see how we would overlay this into our formula into this worksheet. So we've got the 1040, we've got the filing status up top. So we've got the different filing statuses. We'll get into this in more detail later, what the effect of the filing status will be. We have the information up top. We have the filer's name, spouse's name, if applicable, social security number up top. We're going to, of course, have the address. The next major category will be dependents. So we'll list the dependents here. It's things like child as a dependent, oftentimes social security number and the relationship, whether they qualify for the child tax credit. We'll get into that in much more detail later. We're focusing here on the formula down below. So now we're getting into the actual numbers of the return. You'll notice this whole thing from line 1 down to line 7 is basically our income numbers up top, and they got the different categories of income within it. So that's similar. If we looked at our formula here, we're all in gross income. We've got gross income here. Now, if you're used to working in financial accounting, you're probably used to having gross income be basically one line item and then having a whole bunch of expenses. It's kind of the opposite on the tax return, because the tax return, they want to group the different types of income. The Internal Revenue Service is most concerned. They want to make sure that all income is reported, right? So they want to group that all together. They want to have different resources on the income. Therefore, there's a lot of detail on the types of income that could be included. Now, instead of having a separate schedule, as this thing grew, they just put all the income sources basically on page 1. They did some adjustments to them in the changes in the reform, and put some of the added income over here. So if we think about just the line item for income, much of it is just on page 1 of the 1040. This is all different types of income. We have the W-2 income, we've got the tax-exempt interest, the qualified dividends, the IRA distributions, pensions, Social Security. These are all going to be the different types of income. Then they did, and note that for many returns, you're going to have a lot of blank cells, which is kind of a waste. That's going to be confusing people that have a very simple return. They're going to get overwhelmed by a bunch of empty boxes that they're going to have. That's one reason you kind of want to set it up like this, so that people that don't need all the added schedules just see a very simple return. And they did that to some degree because they actually moved some of the Schedule 1 items over here. You'll see additional income items. So the tax refund credits, the alimony received, so you got all this information that could be added in and then fill into the page 1. You'll see this combined lines 1 through 8. Enter here on form 1040, line 7A, right? So this then would feed back into the 1040 on line 7A if those were applicable. Now, the ones that the items of income that they're going to put on Schedule 1 are items that are less likely to be applicable to more people, and therefore not something you need on the first page of the 1040. A lot of this other stuff here, obviously the W-2 income is probably the thing that's going to be most used. Many of these other income items may not be something that many people have, but the most common ones are going to be on the first page of the 1040. The ones that are less common, but if you're looking for them, of course, will be on the Schedule 1. These 3 schedules, 1, 2, and 3, are some of the major changes that happened last year. In our example, then, we just have the $100,000 of our revenue, just W-2 wages. We're saying we don't have anything else to keep it simple. Then we've got the deductions. So you'll recall the deductions then are going to be the next line item. So we've got our above the line deductions, we're going to call them, the deductions for adjusted gross income. They used to be called above the line deductions. Now we're going to call them basically, I guess, Schedule 1 deductions. They're the deductions other than the itemized deductions. So where do those line up in our Form 1040? Those are all going to be in line 8A. So you'll note what they did here is they moved it from a 1040. It's no longer on the first page of the 1040 because these are deductions, once again, that may not apply to many taxpayers. And if you put it on the first page, I think the logic would be if you put it on the first page, you're going to confuse a lot of taxpayers. And the more advanced taxpayers are more likely to get help. Therefore, why don't you move that to a different schedule? So the different schedule then, Schedule 1, are going to be those adjustments. You go to Schedule 1 as you would basically in a worksheet such as this, in a different worksheet, and you'd say that now we have the adjustments to income, and then we have the list of all the adjustments to income, and none of them are going to apply here in our example. If they would add up, then you'd have the line on 22, which would then feed over to the Form 1040 and then be applicable here in 8A. Then we would take the amount here on 7A minus 8A. Let's go ahead and add something just so we can see it. We'll get into more detail on these later, but if I go to Schedule A and we look through the adjustments, let's say we're going to have an IRA deduction here. So I'm going to go to the IRA. I'm going to go to the jump to the input. And let's say we have an IRA of 1,000 that we're going to put in here and say that's a deduction. So that's going to be a deduction here. So now you see it on the adjustments. There's the adjustment. That then feeds over to the 1040. We go back to the 1040, scroll down. There's that 1,000. So we got the 100,000 minus the 1,000. We're at the adjusted gross income of the 99. That's not the taxable income yet. That's a subtotal. So that would be similar to our worksheet here, where we had the adjusted gross income here. And if I add this to our worksheet in this format, similar fashion, we'd go to the adjustments. We're going to say the IRA was 1,000. That'll feed into the lead sheet now, or 1,000, not 10,000. And that'll lead into the lead sheet of tax forms. I went back and changed it again. It should be 1,000, so minus the 1,000 to get to that 99. Now that's a subtotal. Then we take the greater of the itemized or the standard deduction. So if we go back to our forms up top, we take the greater of the itemized or standard. So line 9 then is the standard deduction or the itemized deduction. If we're taking the standard deduction, all we need is one line because it's going to be basically all right here. We don't need any other lead sheet. That's the point of having a standard deduction. That's why they're trying to get more of a standard deduction, because it simplifies everything. If everybody just takes a deduction, you're not adding up, in essence, the expenses. They're just going to say whatever your filing status is, you get the standard deduction with a few adjustments if you're over 65 or blind or something like that. So there's the standard deduction. We'll get into more detail on that. However, if you're itemizing, then you do have to go add everything up. You got to put everything together. You got to do that on a separate schedule. So just like with Excel, you would do that on a separate schedule. Now, long ago, they had broken that out long ago because that was never, it's been too big to fit on the 1040 page one for quite some time. That would be on the Schedule A. So that's not one of the main schedules or the changes that we made. That's a Schedule A that's been in existence for some time now, but same kind of concept. All the other schedules, you'll note, basically lead in to the 1040 in some fashion. The ones that are up here, Schedule 1, 2, and 3, are basically directly related, and fairly recently were basically a lot of it was part of the 1040. Okay, so that's going to be the greater of the standard deduction or the itemized deduction. In this case, we're taking the head of household itemized deduction at the $18,350. If we take the $99,000 minus the $18,350, we then get to our basically taxable income. This is all something that you can calculate in an Excel worksheet in a similar fashion and basically double check your number in that way. The Excel worksheet to me is more transparent than basically a database program. Then we go to the second half, which we're going to say is on page 2. Now that we have our income, we have to calculate the tax. So if we go to page 2 then of the 1040, we have the first thing, which will be the tax calculation. We'll get into how the tax is calculated in future presentations and some examples of that. It's going to be a progressive tax rate, so there could be multiple tax rates that are applied there. If we think about the Excel worksheet, typically we won't be calculating the amount of the tax because we're going to be dependent on the software. We'll get into more of that in the future and why and exactly how it's calculated. But here we could say it's 12,187. So we got the 12,187, I'm going to say, for the tax, which is an average of the 15%. And so if we go back to our software, then we've got things like credits. In this example, we had a child, so we had the child tax credit. We'll talk more about credits later, but credits are different than the deductions, and therefore they're not in the calculation, or why they're different is they're not in the calculation to get to basically the net income or the taxable income, but rather they're similar to payments because you get the dollar for dollar tax back. That's why they're on this side, because they're kind of like payments that we made rather than deductions to the income. They're better in that case. If you had a dollar for dollar credit versus a dollar for dollar deduction, the credit would be more valuable than the deduction. So then if we had our tax minus the credit, now we're at the tax of 10,187. So we have a tax now of 10,187. Line 15 says other taxes, including self-employment tax. So if we had self-employment, which is kind of like the Social Security and Medicare is basically the Social Security and Medicare for self-employed. We'll talk about that later. Line 16, we're going to add lines 14 and 15 for the total tax. There's our total tax. Then we have the federal income withheld. We didn't include any here. What if we had a withholding then, which we typically would? If we go back to our data input screen, and I'm going to say that we had wages of 100,000. Let's say that we had withholdings of 15,000 for the Fed. Back to our forms. So this is what was taken out of our paycheck. Now we're talking about payments that we actually made. So there's the 10,187 minus the 15,000, and then we have the other credits that will be breaking out. These are the refundable portion of the credits. These are credits that can take you in essence below zero, having a refund even though no tax was paid. We'll talk more about that later. But we then go down to line 19, which has your total payments, which is going to be the 15,000. So then we have line 20, which says if line 19 is more than line 16, subtract 16 from 19. So here's line 16 and 19. If we subtract them, we get the 4,813, in this case being an overpayment. So we'll get more into depth on each of these line items. What you want to do now is remember or be able to get a basic outline of the Form 1040, get the idea that it's going to be built in a similar fashion as you might be building a spreadsheet with most of the schedules feeding into the main formula, and the first page or the main part of the tax return being the 1040, which will have the information that will be necessary up top. Then it'll have basically the outline of the formula plus more detail of it. And then all the schedules, in essence, will feed into the 1040. Also note that if you were to do this in something like Excel, which is useful to do, and I'll give you the worksheet so you can do this, and put this into Excel, the second half, then we have the tax. Notice I put the tax in there directly from the tax software because it will be a progressive tax. So I'm relying on the tax software to come up with the tax. Then we've got the tax credit, which we're going to say was the 2,000, which could feed in from another worksheet that would feed into the credit line. We have the other taxes, and then we have the tax payments and refundable credits, which we could, again, pull that in from another worksheet. The actual payments, credits and payments, 15,000, which would feed in to the actual tax formula. And that's going to give us the tax refund here. The tax refund being the 12,187 minus the 2,000 minus the 15,000, which is going to give us a refund of that 4,813. And so you want to be able to kind of double check that and work through that and understand basically the formula versus what's going to be included or as it relates to what's included in the 1040.